I still think people do not understand how big this is. So we're starting to see the point that liquidity is going to come back into the market, which is why I've always been a big proponent of the fact that crypto is macro and macro is crypto.
Yes. Today we sit down with global macro investor Raoul Pal to discuss the potential that is Bitcoin and crypto in 2023. Now Raoul is the founder of Real Vision and Real Vision Crypto. Awesome website, completely free. And I will link Raoul's YouTube page down below. Make sure you click subscribe. He puts out awesome content. But in today's interview, things get wild. We discuss everything from traditional finance to the macro landscape, to the potential of Ethereum, the potential of Solana, Cardano, AI tokens, and so much more. So Raoul, what's the state of macro investing right now?
So macro investing is best summed up by the word denial. So, and people will interpret this two ways. People saying, yeah, the market's denying that it should go lower because earnings are going to be revised lower and that we're going into recession. And my version of that is, yes, tell me something I don't know. And markets are pretty clever. They forward look. So when I look at the macro data, I'm expecting a recession. Now, I understand it seems a bit not very clear because unemployment's not moving yet, stuff's happening, but all my forward-looking indicators suggest that we're going to go into a recession. But what is unexpected, it looks like it's not going to last very long. So the forward-looking stuff based on liquidity, and I'll come into why this is important in a sec, is actually saying that after about April, things start improving. So we go into the vortex now of everything's going to feel terrible, the unemployment's going to start rising, all of the data is going to come out bad. But the market, I think, is forward-looking this turn in the data. And we've seen it with the Federal Reserve. The Federal Reserve kind of got to the point where we're kind of almost done. They've gone from 50 basis point rate hikes to 25 basis points, and then it'll be stopped. Last time it stopped, Bitcoin went up 300%. ETH did about the same. The rest of the markets rallied, significantly. So I think that's where we are. We're at the juncture where the markets are sniffing out the turn, that something is changing. Inflation is going to start falling, and the narrative is going to shift towards we're in recession now. And that's when everybody thinks, well, we should be maximum bearish, but actually the markets are forward looking and start discounting an improved situation, whether it's more stimulus or rate cuts or whatever it is, at least the Fed stopping raising rates, killing all of us. So how does this all work between macro and crypto? Because that's the important thing, because people are like, well, what do I care? Well, you need to care because liquidity, which is the amount of money in the system, the rate of change of the money that actually matters, that's what drives crypto cycles. I don't even think it's the halving at all. When I actually match up the peak in Bitcoin cycles, it exactly matches the peak in the ISM survey, which is the business cycle. Why? Because it also matches the peak in the liquidity cycle. It just so happens that the liquidity cycle since 2009 has been about 3 and a bit years between each time the economy. And there's a lot bigger macro discussion about why that is. But I think that crypto is just the liquidity cycle plus the secular adoption trend. So, when we all put that logarithmic trend up and it gets rid of all of the noise of the big sell-offs and rallies, we know that actually it's a pretty steady rise over time, right? That's the adoption of the technology. That's the game we're all really playing. But when you put it to the normal chart, it does this a lot. The thing that drives this is the liquidity in the system, the amount of money coming in the system. Okay. So now people say, yeah, but look at US M2. It's the lowest it's ever been. M2 growth year on year. It's the lowest it's ever been. Yes, but the forward-looking stuff like Chinese money supply growth and credit has led our cycle by about a year. And that started rallying strongly. So we're starting to see the point that liquidity is going to come back into the market. And that makes sense because if the Fed are going to stop raising rates, that's going to make things feel a little bit better. Money will come a little bit back into the system. Even people start buying bonds again and money starts getting recycled. And that means that the M2 will start picking up, and lo and behold, crypto will, because that's what drives these big up and downs, not the halving cycle. It's all about macro, which is why I've always been a big proponent of the fact that crypto is macro and macro is crypto. They're all part of the same thing. We're playing two things. One is an adoption of a technology at scale, one of the fastest adoptions of any technology in all history. And the volatility is driven by the liquidity cycle.
So I follow you on Real Vision Crypto. It's free. I love your interviews. In summation, what you just said for crypto, because I believe you mentioned that in April is when, although it might be the most bearish in sentiment, a shift is likely to happen. But anyway, crypto topped in 2021, bear market in 2022. Just, thoughts on 2023 for crypto. What would you say?
Crypto spring. It's the same for the economy as it is for crypto. So the economy will feel like winter time for a bit, and then spring will come. Crypto forward looks it by about 6 months, maybe 9 months, because ETH bottomed in June, Bitcoin bottomed in October. So we got that kind of 6-month lead time. So crypto's already in spring. And spring can be pretty amazing. So if you go back and look at crypto spring in 2019, as I said, both ETH and Bitcoin did 285%. Then they backed off quite a long way for a while, even when the Fed were cutting rates and they stopped quantitative easing. They stopped quantitative tightening and moved to quantitative easing. It actually backed off a bit from then. So let's go back to the previous cycle, the 2014-15 period. That saw similar. But actually what happened was we had this first spring. Then we had this season transition. Now, 2018 and 19 was actually quite a big sell-off over time. 2015, 14 was sideways from this big wedge. And then it all broke higher. And so it's giving us a structure of how these things look like when liquidity comes back. This is not a mystery. It's the liquidity cycle. So it's going to be some form of rally, probably a lot further than we are now, best guess. Consolidation, sideways or down, who the hell knows? And then as the economy continues to be weak and we go into an election, well, lo and behold, they're going to be giving out money again in certain ways, whatever way that is, whether it's tax cuts or anything to create liquidity in the system because you want to win an election. So it's like the same setup all over again. And that's probably why we keep seeing these setups, because it's driven by this liquidity cycle. And every time the Federal Reserve have been doing the same thing, they've either been trying to tighten rates or the economy slowed down and they need to pick it back up again. So it's interesting. So spring is where we are, and we've only just started.
So if I'm an investor who wants to, I feel like I don't have a big enough spot position in either Bitcoin, Ethereum, Cardano, Algorand, whatever, I'm looking to take out a position in. Would you say, in the next, either now or the next 3 months or 6 months is the time I should be looking to buy?
So you kind of either buy now, and this is where the market is struggling with this, because few people have flipped out because they made some money, got called the low. The people with shorter term time horizons. Others like it's overbought, but usually these kind of conditions are where you tend to get these crazy legs to the upside because everybody's underweight, because everyone's got the same thing as you. Is I don't have enough spot. Oh shit, what do I do? Then you have to FOMO in and you'll end up FOMOing too high. So this is how it is written. It is always this way. And so my best guess, and I don't know, I don't have a crystal ball, but usually because it's set up like this, the path of most pain is higher. And then once everybody goes, right, it's going, it's running, is usually when this correction happens. So do you get another chance to buy it again at these levels if you miss it now? Maybe. We don't know if it has that downward correction or the sideways correction. You will get a time to buy it after a consolidation later. But really, I would be, and this is what I've been doing, is buying, I was buying from June onwards as much as I could with any cash flow I got, because I'm still fully invested in crypto. I never sold anything, but I've been any cash flow I can, just putting it in is, okay, even now, I've just put money in recently, expecting a higher move, and then if that consolidation comes, that's when I would add some more again. So if you're a longer term time horizon player, I'm not talking about the short term. I don't know. Maybe I'm wrong. Maybe I'm right. But I don't find this a bad level to dollar cost average, or just put a chunk in and realize that there is going to be times when it's going to correct again. But the low is in.
Raoul, something that scares me that I hear about is an inverted yield curve, because that has historically predicted many a recession every time that is inverted. Could you explain what that is, and if you put in any weight to that?
Well, we've already talked about the fact that all the forward-looking indicators say a recession is coming, and the yield curve is a great one. It pretty much always nails it, right? So that's when long-term interest rates are below short-term interest rates. And what that means is that the bond market is predicting that future economic conditions are going to be weaker and inflation is going to be less. And then eventually, once the Fed start cutting, then the short end goes down and the long end usually stays stable for a while. And then eventually, as the cycle matures, yields rise there, as it's projecting that the Fed will have to raise rates at some point in 2025 or 26 or whatever it is. So this is why when the bond market's doing this, and it's about, at about this kind of between 50 basis points and 100 basis points inversion, which means 10-year yields are 50 basis points. Right now, they're about 75 basis points less than 2-year yields. It's telling you, yeah, it's pretty baked in the cake. We'll get a recession. So the informational value is, we know this because it's been doing this for a while now. So a recession can't be a shock to anybody. And if everybody's expecting it, and here you are, two crypto guys talking about yield curves, which I love because this is macros crypto, right? You've all learned. Is that okay? If everybody now knows, then what is the probability that it causes more pain? Because almost everybody's underweight because they know it's coming. So the cash positions, look at the crypto market, 18, 20% stable coins, highest ever. That tells me everybody's going to panic if the bloody market goes up because they are underinvested. So it's very interesting.
Let's pivot off macro for a second. Just look at crypto.
Sorry, just one thing to go back to with this crypto. Sorry, is the only thing that could be that is a different setup than the sideways or the gradual sell-off is, let's say, we've seen that the US is trying to stamp on crypto banking, which they've done before. And maybe there's some other regulatory issues. Maybe the Ripple case goes the wrong way. And they start saying, well, ETH could be a security. Obviously, it would still have to go to court. All sorts of things have to happen. Could there be a sharp sell-off? So as opposed to the slow one, could it be it pukes 50% in 2 weeks and then rebuilds from that? That's the other possible outcome that's in my head. I don't know.
So that would be a regulatory crackdown. Obviously, that would hurt the price in the short term, but that doesn't stop the innovation happening globally, nor does it stop the network effect from growing. Could you talk about why you're so bullish on Ethereum specifically?
I am agnostic to who wins. I don't care. All I do is look at the chains and think, okay, I want to allocate capital. What ecosystem do I want to allocate to right now? What has the best risk-adjusted returns? So there are going to be several projects that do much better than Ethereum and will do really well. I actually think Solana will do better than Ethereum, possibly. And we can talk about that later. But there's many. So I'm not saying I'm an Ethereum maximalist in any way. I'm saying it has observable network effects beyond any other token ecosystem. The number of use cases, the applications, the number of wallet addresses, the kind of velocity of money. Okay, that's amazing. So Ethereum is really special there. But staking is even more special. Another thing the US might try and crack down on. Brian Armstrong was worried about this. But staking is really special, and most people don't understand it because most people don't come from finance. Staking, as we know, you get given a yield if you stake crypto, and if you do it in Ethereum, what you're doing is you have to stake for a year if you're going to do it yourself, or if not, use Lido or Rocket Pool or whatever, and you've got a liquidity mismatch there because they're providing short-term liquidity and staking when it doesn't actually exist. So we know that these things can go wrong. Not saying that they will, but they could. So I won't do that. But this Shanghai fork means that liquidity is available to any staker at any time. What does that do? That creates a money market curve for Ethereum, which is like, people use CDs and they use 2-year bonds and they use this. This is what we're going to create. And that means you have financial liquidity to build things on top of, or you're incentivized to keep your money and stake it because you can get it back at any time, as opposed to some arbitrary date in a year's time when you don't know what the crypto market's going to look like. So I'm going to stake my stuff if I can then. And particularly if I can do it myself, which might be a little more difficult to do, but it's in my control. Nobody can default on me. It's in the smart contract, and I'm going to get my money. So this is a very, very big innovation for what can be built on top of Ethereum. It's also a very, very important mechanism to what Ethereum has created, which is it now has this burning mechanism that is making it scarcer in supply. And we've seen that just coming off the bear market lows, the early stages of spring, the first shoots, the bloody thing went negative issuance already, deflationary. I'm like, huh. And right now, there's only 16% of all ETH is staked. And if you think of staked ETH as taken off the market that nobody can use for derivatives or anything else, right? So you can't create, financial products out of it. Well, all the other big ecosystems like Solana and stuff have up to 40 to 60% staking. So let's assume Ethereum gets to 40%, 35%. So doubling at least of the number of people who've taken Ethereum out of supply. And imagine that's happening in the spring going to summer. There ain't any ETH. This is a problem. It actually, I think it may be such a problem in a bull market that it's either going to force massive upside volatility spikes that become kind of unmanageable, or if it does drive up fees so much, then obviously it bleeds into the layer twos. But they too consume ETH. So it's still circular. Yes, they consume less ETH. So it's a very interesting situation. So that's why I'm very, very bullish on ETH overall. I just think it's the most vibrant, deepest, broadest ecosystem with the most institutional style adoption, the most that people understand. And let's face it, there is only one money on the internet, and it's not Bitcoin. The money of the internet is Ethereum. It is the only ecosystem where we quote prices in a foreign currency. Now, what was hilarious today, there was a tweet out about the new Bitcoin NFTs, and they're like, they are 1 point whatever Bitcoin brackets X number of ETH. I found that hilarious because ETH is the money of the internet. Now, I don't think it's going to lose that. But that, again, doesn't mean it's the best performer, because we're going to push use cases elsewhere for innovation. We've got things like SUI coming. Aptos hasn't fully been utilized yet. We need to see the network effects. Solana, I think they're aiming for the broadest adoption by making it a consumer-friendly place, to onboard normies. Okay, that's very powerful. If they get that right, then, and their work with people like Meta and stuff like that, Instagram, is very interesting. That's super amazing. Polygon, okay, amazing group. What are they doing? They're onboarding a lot of people. They've got a lot of throughput. Super interesting. SUI hasn't even come onto the market yet, and that is faster, incredible team, stuff like that. So there's a lot going on here. But ETH is the easiest way because it's probably got the least risk.
And then just to finish up with Ethereum before we get to Solana, NFTs, and other things in crypto, you mentioned, obviously the last question for ETH is going to be a price prediction, but before that, the ETH layer 2 ecosystem ecosystem. I saw recently on Real Vision Crypto, by the way, anybody in our audience, free to go and check that out, no paywall. But a recent episode, Real Vision Crypto, was on Starkware or Starknet. One aspect of ETH Layer 2's ecosystem is also Optimism, Arbitrum, Rollups, Polygon. Are you bullish on ETH Layer 2? Is it worth investing in today, or are you just waiting and watching? As you said, it makes the whole Ethereum ecosystem much stronger. But
yeah, I own a bit of Matic, but I don't know how to approach it because I don't know how to measure the network effects in terms of, because we don't know how it works really yet, because it generates so much less fees, so you need so much more transaction volume to generate the network value. You know, Bitcoin's network value is less throughput, higher transaction values, right? That's why Bitcoin is still the most dominant chain. I don't think that'll last because of the dynamics of ETH. And again, that's no diss against Bitcoin. They're just different things. So I don't know how to value the layer 2s. So I'm watching them with interest, and I got a bit of cash in them. And I'm sure I'll FOMO into something at the wrong point at some point. But
why do all the VCs always go for Matic first, or like the big traditional finance guys, they go for Matic first? Why is that?
I think their marketing team is better, right? You know, the game of network adoption is also attention. You know, and they've just done a better job at getting attention. They understood that doing a deal with Google, which actually meant nothing, actually got them headlines everywhere that they've done deals with Google. They did one with Disney too. They're not doing anything really with Disney, but Matic, Disney. You know, narratives are what wins in this game. And, you know, that's one of the reasons Bitcoin has kind of not outperformed in this down cycle, is because it's lost its narrative. It became much more insular. So that insular narrative is, you know, you have to eat steak, do nothing but stack sats, and have this lifestyle of complete nothingness. You know, it's not appealing to that many people. So it's less vibrant. It's interesting. So, because these are all memes as well as technology, but it's memes that drive the adoption. And then as people join it, they start creating use cases.
And then finally on ETH, price prediction for, you choose 2023 or this coming cycle. What do you think?
I don't know. I always get, you know, there was no upside to price predictions because your face gets rubbed in it. They cut this clip out and then say, look at you, you're a fucking moron. So, you know, I just hate doing it, but, you know, I don't see any reason why it's not above 10,000. I see no reason at all why it's not above 10,000. So, you know, that's a decent upside from here.
By 2024?
Yeah.
I totally understand, for all the reasons you mentioned, why Ethereum has sort of maybe some of the best upside potential with some of the least risk in crypto. But why Solana? Because it seems like they have so much sell pressure from the FTX, owned a lot of it. What makes you bullish?
Because everybody thinks the same thing. Everybody got forced out. Everybody's like, the chain breaks. Tell me something we don't know. Do you assume that the team at Solana, who are very smart, don't know that and haven't been working on it? Of course they have. Well, all the VCs, they're all stuck. Everybody knows this. So then you've got to say, okay, what happens if everybody's wrong? What happens if it is actually that vibrant ecosystem that has the second largest NFT community and is onboarding a lot of people and has retail stores and has a mobile phone and is doing deals with Meta and is, okay, well, then the price is well wrong. So I just flip up the chart of ETH in 2018 and then put it against the chart of Solana. They're pretty much identical. ETH did 47x from that low. And we got down to $9 or whatever it was, or $8 in Solana. I mean, it's already up a decent amount already. And so you've got to ask yourself, is the narrative right? It's the same with the recession idea, right? If everybody knows it to be, then everybody's positioned for it. So in which case, imagine if Solana continues to do well and they're hacker houses continue to build great products and they get traction in places that we didn't expect. They're one announcement or something, some adoption moment away from everybody having to panic. And if I look at the chart of the ETH Solana ratio, it's been this beautiful downtrend and it's touching its nose up against that thing. Now, does it break out? I don't know. I don't have a huge bet in Solana, but I have a bet. And I would, if I saw the right situation, move some of my ETH into Solana. And that applies to other things too. But what Solana's interesting is it got battle tested, right? Others haven't been battle tested. Polygon's not really been battle tested in the same way yet. You know, we haven't seen the full size of the community. Solana is very vibrant. So that's why you battle test something, you got the Lindy effect where it survived. And then we have a crypto spring and bull market arriving, and we can see real economic activity going on there. Okay, I like that.
And this would be more of a trade for you to accumulate more ETH. Or it's not. What I'm hearing is it's not so much long term. You're willing to take the bet.
I'll take this bet for the next, for this whole cycle. So, I'll take that bet for 2 years and wait and see. Now, if it doesn't play out and something happens, I'll change it because it's not my core. Well, ETH I won't change. Sure, I might eventually use some of my ETH for some other stuff and some other bets where I think it might outperform ETH. But generally, that's my core position. And then, we'll see how it goes.
And if Bitcoin gets, let's say, 120K to 150K this cycle, if Ethereum is getting close to 10K this cycle, Solana could maybe get to what this cycle?
1,000.
Dare to dream. Dare to dream.
Maybe not. Maybe it's 500. Maybe it's back to the all-time high. Any of those are all great outcomes. Any of us will take that. So we've got a battle-tested chain that has real economic activity that can go from wherever we are today, $24 to $240. Whatever the high was, 283, I can't remember, whatever it was, is, well, okay, I'll take the 12x. That's the worst case.
Yeah, 12x is great in any other industry.
Yeah, not in early stage tokens, but they come with higher risk.
Raoul.
So Solana is your maybe number one counter narrative crypto pick, but I'm going to put to you 3 name coins. You can only choose one: Cardano, Algorand, Avalanche. Which one you like?
I don't know, and I'm going to say Avalanche.
Whoa, Avalanche over Algorand and Cardano.
Well, I would rank, if you wanted to rank them, I would put Cardano third. I don't know between Algorand, and I know the Algorand guys pretty well, and I know the Avalanche guys pretty well. They're both trying to solve similar kind of things, which is finance, real assets, bunch of stuff like that. And they're both smart groups. So I don't know who will win out of those two. But I would say that Avalanche, because of its speed and its, those subnets or whatever they're called, they might have the technological advantage, but I don't know. Don't hold a strong view on any of those.
Mm-hmm. But the reason Avalanche, you like it the best is because you like what they're doing with subnets, that they're prioritizing for speed and transactions, which, a lot of cryptos are doing, but, they're executing.
Yeah, that's right. They're executing, they're doing volume. It's a real, it's a real thing. And I know they've got, good plans to try and do more.
Raoul.
And then just one more. Sorry, Austin. Me and Raoul are having a moment, but Cardano made number 3. Now, that might surprise a lot of people. I think you've talked about Cardano before. What is it? If Cardano could improve on one thing to make it higher on your list, what would you say? Because they have an NFT market, they have some stuff,
Use. They've got the things, but it for some reason, it's got an amazing community, but it's lacking on vibrancy of projects that are coming to market that are creating things that people are engaged in. and the using it in emerging markets, that was a small use case that was there to explain, but it's not really got traction in that. So it is doing well, and I'm not comparing it badly to like why Doge is, which is the most extreme example. Doge is a really biased network, right? Because it's all retail and no applications. Now, I'm always interested in Doge because if Elon decides to use it across his ecosystems, then it's going to have a lot of applications and use layers, in which case it's wildly undervalued because it has this vibrant community. And it's same with Cardano. It's got a very vibrant community, but it doesn't yet have the breakthrough in use cases that would cause a real explosion in price versus the rest of the space. It'll have beta to the rest of the space, but not a big change. And that's why, if I see the speed at which Avalanche got use, or Algorand less so either. That's kind of true of Algorand too, right? To be honest. And again, they're not like anything's a bad project. It's like it's the whim of how the world works. It's very difficult to tell people to not develop on Ethereum, Polygon, Solana, when there's tons of devs, tons of people. It's really hard to break that, which is why it kind of ends up that these bigger ones end up getting bigger.
Raoul, I'm a huge fan of your Twitter, and you were just speaking about the community that, not on Twitter, but just now, that Elon Musk has for Dogecoin, and a perspective I see from you on Twitter. You're still insanely bullish on NFTs. How do you see that, or correct me if I'm wrong, but how do you see that evolving over the next few years? Are they going to still be the same profile pic-esque NFTs that we saw in 2021?
I think I'm going to do a whole piece on this because I still think people do not understand how big this is. And, I've done some big interviews with Punk 6529 and other thought leaders in the space, but I just think people have no comprehension of how big this is and what it is. So I am incredibly bullish. We're about to do something very big with Real Vision. So watch this space and watch my Twitter feed for details over the next month. But the point being is, firstly, at just simple level, we've just gone through a bear market. Everybody in Bitcoin and Ethereum is throwing shit at each other. The NFT community is saying good morning. They're vibrant, they're having fun, and it's optimistic. Okay, that's interesting, right? If you go back to that Paul Tudor Jones quote, what got him into Bitcoin was the fact that the market falls 85% and 80% of people don't sell. Right, here we've got a bunch of people having the time of their lives in NFTs and losing money, and nobody cares. It's like, that's a signal to you that the power of the community model that we've even been talking about with these other chains is even more prevalent at the applications layer with this, and whether it's PFPs or whether it's membership passes or whether it's stuff, right? Okay, great. What is amazing about all of this is, behind me, I've got my token frame, there's my ape up, and, flip around, it's got my punk and stuff like that. These things, like the ape or the punk, they're like, in a bear market, they held 65 ETH floor, the entire thing.
I wanted to buy one, but I was like, damn, like there's still 65 ETH.
So it had come down. So I bought my punk more recently because I thought, okay, what's the downside here? So this is a thing that people do not understand that I need to express to people. So the downside of my ape, I can't remember what I paid for it, 70 something. The downside was that low, which was the 55 low that hit in June. Okay. So that's probably the worst case scenario when everybody wanted liquidity. Now, the upside of these things could be anything. But more importantly, they're priced in ETH. This is the bit people don't understand. It can stay at 65 ETH for the rest of its life. But if ETH goes to 10,000, I've still got my ETH. Now, if that punk goes back up to the all-time highs, I could triple the amount of money I've made in my ETH. So I get this thing of being part of the punk community, the ape community, and the other things, and some of the benefits. I mean, apes give me yield because I get given stuff all the time, and it has value. Punks is the rights, or that's my beeple there. So you've got stuff like that have a scarcity and a status within the ecosystem. It trades like property. So in a recession, the thing that goes down the least is high-end property. It becomes stable and illiquid. But when the ETH ecosystem is vibrant, or the property market in LA or London or Cayman Islands or whatever, when the economy's booming, a high-end property goes ripping higher than anything else because people are recycling money into assets. These are the grail assets of the entire crypto world. So people recycle it because you're still not selling your ETH. It's not like you're taking off the market. So from that alone, it's a really interesting thing. But it's much bigger than all of that, because really what this is two concepts that people need to understand. Firstly, in a digital world, you can endlessly reproduce everything at zero cost. Don't forget, this we'd have to do in a bloody studio with camera people and all that stuff. That's what we started Real Vision like. Now we just do this. It's free. It's basically free, apart from our time. So everything that's digitalized goes to zero in value or cost, because you can produce infinite amounts of it. When we started Real Vision, there was no competitors, and now there's 1,000. Okay, that's really interesting. So how the hell we're hurtling into the metaverse in this increasingly digital world? How do you stop everything being worthless? Well, that's what blockchain does. It creates scarcity in a digital world. Okay, that did not exist. Right, that is the big breakthrough. Then what the other big breakthrough was Vitalik's breakthrough, which was smart contracts. Every single thing we do as humans is a contractual term that we interact with any part of society. So me coming on here is a contract. It was a written contract over email. Hey, do you want to do this? Yeah, fine. Right, that's a contract. Everything from your house, your ownership of your house, the ownership of your car, and we've just seen that whole thing with Tezos and the new car ownership, and they're going to test that thing out in California. But every single thing that we do is a contract. That's all going on chain. People don't understand how big this is. And when I use this all the time, because again, people don't understand. Ticketmaster, every time you go to a gig, the ticket that they have is now a Web3 ticket. And then they drop NFTs to you. They've dropped 10 million NFTs, more than anybody else in the world. Because what is a ticket? It's a contract. So if you can create contracts that are provable, auditable, and those contracts can be scarce or non-scarce, you've built an entire financial system and system of value, whole value system. So financial system just sits on the layer of value system that didn't exist. So this is not a small thing. This is a societally large thing. And NFTs are the start of that.
And Real Vision Crypto, completely free, link down below. If there's one interview that you would recommend our audience check out, what would that be?
God, there's been some good ones. I'm going to give them two. If you want the big brain-blowing stuff, connect my interview with Punk6529 and my interview with Balaji. They're both very long, so you need a bottle of wine and some time. But those will give you the broader concept of how big this all is and what we're talking about. Because it's not about flipping 8 pictures or, degenning. That's just at the margin, the small part of what is really happening. This is why financial institutions are interested in all of this. Not because they can make trading books, it's because the entire securities industry is a contract. And it's inefficient. Settling stuff, money is a contract. Right? Why do you think central bank digital currencies are coming? Because the blockchain is a more efficient way of settling money. And NFTs are a more efficient way of settling every contract that exists, however unique it is. So that entire derivative industry, which is $4 quadrillion or whatever the stupidity of the size of it, that is the size of this.
My final question is AI, not a trend, here to stay. AI cryptos, what are your thoughts?
So AI, look, is societally game changing on a scale of which, again, people cannot imagine. People have no understanding. What has just happened with ChatGPT is a Cambrian moment. It is, I think, a bigger deflationary shock to the world than China joining the WTO. This is one of the seminal moments of our time. So that's how big this is. AI and crypto. So people want to force these two narratives together because AI is sucking all the air out of the room because it's so fucking cool. And we're all like, oh my God, there's this the singularity coming, and when are the robots going to take me away, and all of that stuff, right? Which we should be worried about. That's a whole nother long conversation for another day. But how I do think about this is, okay, here we are again, about to repeat the same mistake. We're going to accrue all the value to Google and Microsoft. So I think some of these more open AIs like Stability AI should tokenize the network. So then society can share in this, because it is so bloody disruptive that why don't you let society share in the economics of this? And so if you're using a lot of compute for AI calculations, you have to pay in tokens. If you're giving compute, you receive token. There's a way of doing this, building models, you can receive token. You can create a two-way economy around a network, which I think would be very valuable and would create massive network effects, because then everybody wants to build on that AI network. Because if not, we are going to accrue all of the spoils to 2 or 3 firms all over again. And I think it's really important to tokenize this.
I have no ownership in these coins, but the ones I think of that are AI cryptos, Singularity Net, Fetch AI. Have you, any thoughts on the ones we already have, or do you see a new crop?
No, I mean, I saw Richard Galvin, who's a great hedge fund manager at DACM, talking about this too. And I asked people, look, is there any utility, is there any traction? Is any? It's kind of no. It's like, it's great to have the name AI, and they might continue to pump because of it. But until we see some real applications layer, if there was a stability diffusion token, hell yes, I'd buy that. Because don't forget, that ChatGPT has now surpassed crypto as the fastest adoption of any technology the world's ever seen. It went from 0 to 11 million people in 20 days. Imagine if you owned a part of that network.
That'd be crazy. Aaron, final question.
Raoul, thank you so much for coming on today. Again, I encourage everybody, go follow Raoul on Twitter, Real Vision Crypto. That stuff is linked below. My final question for you, Raoul, and just basically final thoughts, maybe best advice for crypto investors going forward. Final thoughts to the Altcoin Daily audience.
My thought on all of this is, I say this a lot, is zoom out. Zoom out and realize you don't know anything. Accept that you don't, because none of us do. That whole series I do, Raoul's Adventures in Crypto, is truly authentically me tapping people on the shoulder I want to talk to and say, hey, let's talk about this. Let's try and figure out that. That's why I get the Bellagis and I've got everybody from Kimball Musk to Bellagi to 6529 to Novogratz. I mean, you name it, they've all been on that, because that is just all of us sitting down to try and learn. So you can peek over the shoulders of you guys learning or me learning. Find people who are credible and authentic. Don't go for the people who are trying to make you rich. Go for the people who want to help you understand what this is really all about. So zoom out, think of the big picture, understand some of the things I talked about today, and realize that you can try and make money trading, or you can participate in one of the largest technological innovations the world has seen, and just let it play out. Don't use leverage, and enjoy the ride.
I love it. Thanks, Raoul.
Thanks, guys, as ever. Great. That was a really good conversation. Loved it.